I'd like to make this interactive if I can, so if people in the back want to participate, maybe come to the front, makes the room a bit cozier. Meanwhile, I'm just going to kick off straight away. My esteemed panel, Abdellah Essonni is heading up ABJAR, a portfolio of hotels crossing multiple operators, brand standards, etc., as well as Anil Bhardwaj, AlMoosa Enterprises, Arenco Group, all service departments. So we've got different views here on owner's perspective on how to asset manage their hotels. Very timely topic with Hama just kicked off at the AGM yesterday, so we're launching active asset management in a more formal format in this part of the world as well. Very happy of being part of that. I'd like to start off, both gentlemen, maybe give me a quick introduction, I was going to say, about your portfolio, and I'd like to know what is your focus as an owner. Are you focused on driving cash flow out of your assets? Are you a long-term investor looking really at asset protection and capital gain maybe when you sell an asset eventually? Because I'm guessing that will have an impact on how you look at your operator, in particular in times where your cash flow is potentially under pressure. I'll start with you, Abdellah.
Am I on? Yeah. Hello, my name is Abdellah Essonni. I'm Chief Executive Officer of ABJAR Hotels, which is a subsidiary of AlMoosa Hospitality. All our hotels are here in Dubai. We have a dozen hotels. What makes us special is that our portfolio is a mixture of managed and franchise hotels. In fact, the biggest portion is actually franchise. So we really sit on both sides of the fence. We're an operator and we're an owner. That gives us a really good understanding of what can be done and what cannot be done. Now, in times like these, and I really don't want to monopolize the conversation, but maybe Anil, you want to introduce yourself before we go on into the heart of the topic?
Yeah, my name is Anil Bhardwaj. I'm a director with the Arenco Group, a local group actually, based primarily in Dubai. We have hotel ownerships, all managed. We deal with all the big boys of the world, and we have a couple of hotels in Oman, also managed by the big boys. You know,
okay.
I would go on.
So first question for you. I think as an owner, everybody's happy when the times are good, the money is rolling in, and you're probably not having an awful lot of issues. It's times like these, and we've got potential double digits declines in the performance. That's where you start looking at the performance of your operator, how your assets are working. First question for you, do you see an operator being proactive? Are they coming to you saying we've got problems, and do you see them actually taking active steps in protecting your interest, or do they sit back until you start screaming?
Right. Well, first of all, I mean, I think the UAE has proven its resilience time and again. I mean, we've had so many ups and downs, and every time the UAE reemerges even stronger than before. Maybe if we could have a show of hands, who was here in 2009? Right. I mean, I'm sure you would agree with me, and you can tell your neighbors that it was probably the saddest chapter that we've lived through. And all of us, me included, we had lots of doubts as to whether Dubai will ever come back to where it was. Sure enough, a few years later, 2014, we saw the statistics. We were only second to Paris in terms of RevPAR, and that is a fantastic achievement. So yes, right now we're going through a rough patch. We've seen a double-digit decline in RevPAR year on year, but it's really not the end of the world. So to go back to your question, Rutger, are the operators proactive? They're just as proactive as you make them, really. As an asset manager, you have to be in there day in, day out. You know, you supposedly know the business. So you don't wait until things go south before you interfere. You get the numbers on a daily basis. Whenever you see that they're deviating from where they should be, and you know, being rational about it, then you bring them back in line.
Keep them alert.
Yeah, I mean the way we work with them is that we have an open line of communication, pretty much on a daily basis. I mean, we do religiously look at the performance figures on a daily basis, and we have that exchange, whether it's RevPAR food and beverage performance or spa or other departments.
But are they proactive? Can you see them actually stepping up their efforts, starting to focus on cost or maybe on additional revenue streams because they realize that it's no longer, low-hanging fruit? They've actually got to start climbing higher in that tree.
Yeah, some are more proactive than others.
Right.
I won't name names, but
no. Let's not go there.
But no, it really I think comes down to how you manage that relationship.
Anil,
So
is that your experience too? Sorry to interrupt.
Sorry,
I just want to
yeah.
keep it balanced a little bit.
Of course.
Yeah, I think basically what Abdellah said is right. I mean, with our asset management division, we certainly interact with the operators a lot. Have to meet them religiously every month. And it depends a lot on how much you drive them and ask the right questions. What I would like to point out is, I think the growth in this region has been so high. Sometimes we do get worried whether the bosses that our GMs report to, maybe a regional setup or somebody up in Brussels or London, they are not able to really be as proactive with the local management.
They're too far removed from...
So yeah, maybe they're so driven by numbers, how many did I open last month and how many I'm going to open in the next 2 months, that they are not able to really sometimes come up with solutions for the local manager to take care of. And those are the bigger issues that really are concerning us a little more right now. High reliance on OTAs and the amount of money we spend on them, for example, or certain technology-driven things, which the local manager has only a limited say on.
Okay.
Delivery through the global booking system of theirs, again, that has to be significantly driven by the global sales offices. That's the area where I feel that either they need to throw the weightage in this region because of the growth we are getting, or they're going to lose out.
Yeah. Let's look at options. So in the market like we are today, revenues are under pressure, occupancy both and room rate. What options do we have? I mean, we can start looking at driving revenue, but as we know, our performance is already pretty good, highest in the world, we've heard this morning. Versus the opposite side is saving cost. In the assumption that revenue should be maximized at any given point in time, whether it's good days or bad days, my view personally is like, if we have to wait until the trading gets tough and then we start looking at driving additional revenue, we haven't been doing our job prior to this. So arguably, revenue should be okay, unless you feel otherwise, and feel free. So if I look at cost savings, there's a couple things. The first thing that happens is hiring freezes. Lay off staff, stop hiring, which potentially impacts on your guest experience and might have short-term savings with long-term impact in terms of brand recognition and guest loyalty. You can start deferring repair and maintenance. How long can you do that? And again, it impacts on your guest experience, potentially also undermines the value of your asset longer term. Or we can cut back on sales and marketing. I'm just naming 3, there's others. Where would you start? What for you are no-go areas like you can't touch sales and marketing or R&M versus areas, well, that's where I would start saving first?
Well, I mean, asset management is all about maximizing the returns of the asset, really. So in the introduction, it says, if you have an empty space, now would it be the right time to put it to use? I would say if you have an empty space, you're not doing your job. I mean, as an asset manager, the property should be optimized, in its entirety. You cannot afford to have an area that's not producing the goods. And like you said, Rutger, you don't wait until the going gets tough to start acting on things like these. Let's take food and beverage, for example. I think we've come to the realization as hoteliers that you're either a hotelier or a restaurateur. It had been proven that to have a successful food and beverage outlet, you'll have to have a specialist restaurateur running for you. Now you can do that in 2 ways: either hire them as a manager under a management agreement, or lease it out to them. Either way, you as the owner, as the asset manager, you'll win. And we've experimented with that, and we've proven that that's the way to go. Yeah, maximizing revenues, absolutely. And then looking at ways to cut costs through contingency plans. And again, like I said earlier, the fact that the RevPAR declining is not the end of the world. So the last thing we're going to do is freak out, and start cutting costs left and right arbitrarily, because that would do more damage actually than good. You cannot significantly cut your payroll, which is your biggest cost chunk, without compromising on quality. What happens when you compromise on quality is that you get bad reviews. Bad reviews, less business. So you're really shooting yourself in the foot.
It's a negative spiral, isn't it? It goes from bad to worse. Anil, is that your view as well?
Yeah, I'll just elaborate a little more. Basically, increasing revenues is the bigger one always, rather than reducing cost. But on the increasing revenues bit, what is, and this has been touched upon in a previous channel, previous session, what's happened with the OTAs? I mean, that's been the biggest surprise over the last decade. The commissions that are being paid to OTAs have now reached levels which we could not even have imagined. And I think that is a cost that needs to be challenged. And it's not going to happen the way the industry is looking at it.
But that's a systemic issue. That's not necessarily related to good or bad trading times. It's an issue, full stop. Right?
It is an issue, and it's an issue which the bigger boys really need to get their act together and attack collectively. They are not going to be able to do it individually.
Okay.
And they do not realize that today it is reaching a point where it is becoming an industry problem. Owners are seriously now wondering, what have I got an operator for? I hired an operator 10 years ago to give me a brand, who would bring the guests through the main door, and then manage day to day. The first part is falling apart a bit at our cost, and that is becoming worrying. Previous panel talked about, we are trying to reduce the level of commissions, etc., but that's not the answer. You will have to sit down together as an industry and attack it.
Yeah. I know this is a favorite topic.
Yes.
It's not necessarily the subject of this session, but
but that's the cost side.
I know, and it's a cost saving that in a time where your margins are getting thinner.
And then the other thing, of course, that Abdellah mentioned about F&B today, and we are not realizing this, but we need to be proactive. It's become a challenge, certainly in this part of the world. In Dubai, for certainly, where you've got so much choices, the restaurants operated in hotels are not doing as well as the guys outside. Okay. And why is that? That is because they're not doing their, they're not specialists.
Are you feeling resistance from operators when you push them to start looking more critical at costs, or start looking for alternative ways of making revenue? Let us say, well, hang on, they all throw the old brand protection flag up, like, hang on, we can't go there because this goes against brand standards, etc. Are they willing to adopt your point of view where you say, listen, I have to protect my income stream, versus being high up on their horse and saying, no, we don't want to go there?
Yeah.
And how do you convince them to adopt your point of view?
Well, I mean, we respect brand standards. It's what makes a brand. That's why we go for a brand in the first place. The way a brand managed to get itself to that certain high position is by maintaining those standards, so we perfectly respect that. But when we get together and think about the greater good, those standards need to be somewhat flexible. Like I said earlier, a lot of brands would tell you, I have this ratio of staff per room, and I cannot come down from that. Well, yes, you can. Let's talk about it. Let's see how we can do it. Instead of having a ratio of 2 per room, let's do 1.8. Let's do 1.5. See how we can create more multitasking. Because at the end of the day, if we don't do that, the business is not going to be sustainable. If your payroll reaches half of your revenue, then we're both in trouble. The operator and the owner. Yeah. It is really not a good scenario to have. So you know, yes, the operators feel very strongly about their standards, but they're also just as rational as us owners.
Anil, you've got a lot of service
Yeah.
departments where your staffing structure is very different in a service department. Leaner, probably, I would imagine, than in a luxury hotel, for example. There's less opportunity, you would think, to save on the payroll side of things. How would you address saving opportunities?
You know, we pioneered the hotel apartment concept in Dubai 25, 30 years ago. And we run that under our own brand. When I look at the GOP ratios there vis-a-vis the GOP ratios of a managed mixed-use property, which also has apartments, I do realize that their GOPs are more challenged. But in fairness to them, they do drive a higher rate. Their brand value does come in. I'm totally in agreement that brand standards have to be respected, because otherwise, what have you bought? The question here is, be very careful as an owner that that interpretation of the brand standard is not the opinion of the man on the spot, which is your general manager. This is the key here. I mean, he may interpret a particular brand standard and say, let's refurbish this restaurant, and he's got this fanciful view about it. And you may land up spending 10 million dirhams on it.
Yeah.
And do the bottom lines make sense? Maybe not. And so you have to be very careful.
Okay.
You know, you have to vet what they're saying.
Let me continue on that for a bit. I mean, we all know the industry is cyclical. We have ups and downs. And we had an interesting comment this morning where we were told that actually in downtime is the opportunity to start making investments. So we're ready to kick ass when the industry picks up again. Would you agree with that? Would you say, well, now occupancies are down. Yes, your cash flow is potentially under pressure, but now is the time where I need to actually start making investments, upgrade my property, maybe start renovations, or maybe start working on different restaurant concepts. So by the time the market picks up, you're good to go and you come out with all guns blazing.
I don't think we tie our decisions to those sort of factors.
No.
But that may be individual to us. We are a very large player in the real estate sector. Hospitality, hotels is only one part of our business with 12 hotels and something like 7,000 keys. We also have a very large other real estate exposure. That is related to our views about Dubai. And I must tell the audience that we have an unspoken partner in all our ventures here in Dubai, and that is the government of Dubai. Frankly, what they have done for this city is incredible. They are the ones proactively doing things. Today, occupancy levels are high, but the rates are down. But we are looking to the future with such optimism. Why is that? There are so many theme parks coming up. There's so many other things coming up, infrastructure development. We are living in, you know, the government is doing so much for us.
In other words, you know, things
we are lucky
will
that way.
get better again.
Yes,
then.
yes.
Okay. We got 6 minutes on the clock. Any questions from the audience? We have a bit of time for interaction. We have two very experienced asset managers here. Maybe there might be some aspiring asset managers wanting to raise questions.
There's a hand back there. Two of them.
I can't see you against the light in the back left.
I'd like to actually ask a question of Abdellah. Since, Abdellah, you have both a franchise and an operator situation, talking about that efficiency and the bottom line right now, would you like to broadly summarize between those two situations, where would you take your next 5 properties to?
You really want to put me on the spot here?
Yes, I do.
Right. Okay. As an owner, Harry, hang on for a second, okay? As an owner, yes, we are. We're very, very involved in our franchise properties. I have people there almost on a daily basis, and we preempt. So, you know, a crisis doesn't just hit you; you see it coming from miles away. So, what we live in today, we had prepared for it a year in advance. Yeah, we do have a crystal ball, yeah. We prepared ourselves for that. We did have a contingency plan so that gradually we came today to a comfortable position. We are there today because we have a free hand to go in these franchise properties and do as we please. Whereas, as you said, Anil, with the managed properties, it's a bit more delicate. It has to be through a dialogue. And again, that's also a dialogue that we started way back in order to preempt and anticipate what's going to hit us. So yeah, to cut it short, it is a lot easier as an owner to properly manage cost in a franchise property. Like I said, that's the biggest chunk of our portfolio right now. We are developing more hotels, and we're developing them under the franchise model. We intend to continue on the franchise model because it serves our purpose. But at the same time, we maintain a really, really good working relationships with our managed hotels.
Thank you. Back to the audience, please.
Harry Johnson. Perhaps you could comment, we have a downturn, slight downturn in Dubai, bigger in other places. At times like this, cash is king. Could you perhaps characterize some of your moves on break-even point and cash retention in the business by centralizing and bringing in-house things which have been done externally?
Who wants to go first?
Very
Anil?
good point. Go ahead,
Yeah, well, you know, I'm sorry, but I will have to answer in the context of Dubai, which is where, you know, my exposure is, and our group. Dubai still enjoys, in spite of the drop in rates, and occupancies, by the way, are still very high, Dubai still enjoys very good profitability and GOP percentages. So if you are facing a situation where you're not able to meet your cash flow in spite of those GOPs, may I suggest your feasibilities done 5 years ago when you took the loan were perhaps wrong. You know, it's not a challenge at the moment. So, you know, these are little finer things that you're talking about. And I think whilst you're talking about the finer things, payroll is a very big cost in all hotel operations. And one of the things I think we need to start thinking in this region where payroll costs, that is cost to company, are going up, whether our manpower levels in this region are, I believe, are significantly higher than, for example, Europe.
Mm-hmm. Sure.
Maybe we need to start thinking before it hits us and before these rising costs hit us even more, to start looking at what does some of the developed markets do where labor costs are higher, and start, you know, adopting some of their practices and trying to control this. Mind you, the customer here is really spoiled. He's really pampered. He's so used to coming to the front door of the hotel and somebody takes his luggage away, his car away, and, you know, is literally at his beck and call every moment. But I think some of those things are going to become a challenge if these rate pressures continue.
Speaking of
Abdellah.
outsourcing, Harry, I don't think we can go crazy with that concept, especially here in Dubai. I mean, we still maintain an occupancy that is high enough to allow us to maintain a lot of the core functions in the hotel. I'm talking about housekeeping and food and beverage, or most of the back of house areas. We're not thinking about outsourcing those yet. But one area where we got really, really busy outsourcing, or the other way around actually, instead of outsourcing it, we're doing it in-house because it costs us a whole lot less, is the AMCs, the annual maintenance contracts, for a lot of things. We talked about asset preservation.
Yep.
Asset preservation is sacred with us. Our group has been in this business for 40 years now, since they opened the Sheraton on the Creek 40 years ago. We don't flip assets. We're in it for the long run. So we maintain them. We constantly renovate our hotels. But wherever we can cut costs, we do. And recently, about a year ago, we started this exercise of internalizing AMCs, or the work that you would do through AMCs for various machinery and corners in the hotel. We trained our staff to handle that themselves. And that had resulted in substantial savings.
Okay. Gentlemen, we're out of time. I'm going to steal 1 minute, if I may, if there's a burning question in the audience. Quick one for our panelists? If not, then may I ask you to give our two esteemed gentlemen a quick applause. And,
Thank you.
Thank you for joining us today.